Hello and welcome to a CMS Forex Daily Market Recap. I'm your fundamental market analyst, Nick Nassad. Today is Monday, June 7th, 2010. Starting with the euro-dollar pair, we saw that the euro bounced up off a fresh 4-year low at 1.1875, reaching a high of 1.1990 prior to the New York Open. That had followed a better than expected German factory orders data, which we'll get to in a second, but also shows that the continued concerns that investors have around the Eurozone sovereign debt crisis continuing to spread. We had the euro fall below this 1.2150 and 1.21 area in late last week as a result of Hungary saying that there's a chance that it could default, though they walked back that statement over the weekend and on Monday, but still that sent jitters throughout the financial community in the Eurozone and throughout the rest of the world and caused a sell-off of risky assets to end the week. We had a bit of an extension of that sell-off to start this week's trading, but then we consolidated following hitting our lows. If we look at the euro-Swiss franc pair, we see that we hit a low of around 1.3850 in Friday's session, and then we retested those lows twice in today's session. So these are actually record lows for this pair. Investors have increasingly turned to the Swiss currency because of its perceived safety and because of Switzerland's growth prospects compared to the Eurozone. We'll see if so far there has not been any intervention by the Swiss National Bank, though we have seen sharp interventions just last month when we had broached the 1.40 level back in May 6th and on May 19th, but so far nothing from the SNB. So again, we're hitting our lows at 1.3850 right now. Similar to the euro-dollar pair, we're seeing a bit of a consolidation here as we have a horizontal level of support and a downward sloping level of resistance. So we'll see which way we break out of this consolidation pattern. Taking a look at the euro-yen, again we had this decline to start this week's trading as we hit a low of 1.805, which was actually an 8.5-year low as we broke below what we had seen 2 weeks ago on May 25th at this 1.0888 level. We did recover throughout the European session and consolidated during the New York trading session around the 1.0960 level. Now again, after the sharp moves we saw to end last week, we could just see traders consolidating their positions until we have another bearish investor sentiment event that sends the euro lower against the yen once more. So the euro is continuing to be under pressure. And right now, the major concern of political leaders is to begin cutting budget deficits. Angela Merkel, the German chancellor, said that her cabinet was about to unveil spending cuts to the tune of 10 billion euros per year for the next 5 years, which would include tax increases, cuts in welfare and jobless benefits, and the loss of about 10,000 civil service posts. That could dent some of the domestic demand in the economy as it continues to recover, though I think from the German perspective they would hope that exports would pick up the slack. So that actually leads us pretty well into the fundamental release we had from Germany overnight. Orders in the month of April were up 2.8%, a much better than expected release, as forecasts had called for a 0.1% decline. The 2.8% rise follows a 5.1% increase in March. Taking a look at the chart to the right, we can see that 3 out of the last 4 months have been rather strong for the German export sector, and it's really important because Germany is the number 1 economy within the Eurozone, and exports make up about 1/3 of all of its GDP. The news would indicate that the weaker euro is helping to make German exports more competitive abroad, and that is helping to boost some of these factory orders. Going back to the theme of budget deficit consolidation, David Cameron, the new UK Prime Minister, began preparing voters for deep spending cuts in his country. In a speech today, he said that the overall scale of the problem is even worse than we thought. The decisions we will make will affect every single person in our country, and the effects of those decisions will stay with us for years, perhaps decades to come. In order to satisfy financial markets and the demand for UK bonds, Cameron is undergoing very sharp cuts to the budget deficit to try to bring it in line from its very high 11% of GDP ratio that we have seen so far through the fiscal year through March. Now, in today's trading, we saw the pair bounce up off the 1.4380 level, or around 1.44, which had been our support to start last week here on the Sunday trading. and we can see that that had acted as support currently, and we managed to retrace about 78.4% of this rise in the pound dollar from May 25th to June 2nd. Our high today tested the 200 period and the 50 period moving averages, and that acted as resistance rather nicely. If we plot another retracement from our Friday move, we can see that that corresponded to around the 50% retracement as well. So while we have corrected some of the sharp slide we saw to end last week, this could just be some consolidation before we see our second leg down in this downswing. We'll get a bit more in terms of clues as to which way the market will go once Asian trading begins. Moving away from our European currencies, let's take a look at the dollar yen. And similar to our other pairs, we saw a move in favor of a risk aversion, which was favoring the yen in this pair in the Asian session, as we had a rather sharp decrease in Asian stocks. But then we managed to rally a good portion of today's declines, but also cut into some of the losses from Friday until we reached the 92 level, which acted as resistance. This also corresponded with our 50 and 100 period moving averages, as well as 50% retracement of this downswing that we had seen in the pair of between 50 and 61.8% of this downswing from Friday to today's low. Now zooming in to the price action, we see that we began declining in the later New York session, and it was a result of US equities falling deeper into the red. Taking a look at the Dow Jones Index, we see that we declined in early New York trading and then recovered around noon up until 2 p.m., actually posting a positive gains during this period, but then we slid in late New York trading, which gave us the bit of down moves in our risk appetite. So here in the dollar yen, we see the yen gaining or the dollar declining in early New York trading, rising again, and then falling again as US stocks dipped. While equities slumped late, gold was actually very strong in today's session. First we hit a low around 1,210, but then surged all the way to 1,244, which was $1 shy, or actually was exactly at our record high for gold. This reflects lingering concerns about the health of the world economy and concerns over sovereign debt, and with a lot of people readjusting their portfolios, trying to figure out the best flight to quality asset, gold seems to be the clear winner of the day, winning over US bonds and currencies. Taking a look at one of our commodity currencies, here's the US dollar, Canadian dollar, and we had a strong move downward, retracing a good portion of the rally we had seen in Friday's session. The move to support at 1.0513 touched our 50 period moving average, as well as a 50% retracement of this upswing right here, and from there we bounced up as US equities retreated. If we take a look at oil prices, we see that we had this similar to our equities. We had a rally in the middle of the day in New York trade, but then following around 1:30 we slid from that high around 72.50 a barrel. So that caused the Canadian to give up some of its earlier gains during the session. The Australian dollar, meanwhile, extended its losses from Friday, but then after rallying, it did not manage to move above its Friday low at 0.8220, and we are going to close below 0.8150. We are confined within this sideways trading range with our low at 0.8070, and we'll see if we test that level, which will be our important level of support. Taking a look at our upcoming fundamental docket, New Zealand posts data on manufacturing sales, the UK releases its retail sales monitor, Japan posts releases on bank lending, money supply, as well as its current account, and Australia releases its NAB business confidence. Overnight, Switzerland posts data on unemployment rate, the SECO economic forecast, leading indicator index, as well as its consumer prices, while Germany posts its trade balance and industrial production. Tomorrow in the North American session, we get data from Canada on its housing starts and from the US on economic optimism. And that will do it for today's broadcast. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.